Hello, nice to meet you. I'm Noah. In this video, I will explain how to use the OKX exchange. OKX is ranked as the second largest global cryptocurrency exchange. Because OKX supports Bitcoin options trading and over-the-counter trading, it even has a separate institutional menu, making it a platform used by institutions as well. OKX uses its own exchange token called OKB, which can be used for launchpads. OKX's launchpad often features large-scale projects, so just participating can yield significant profits. As you can see, since it almost guarantees profits, if a launch pool opens on OKX, it is one of the pools you should participate in first. Additionally, since holding OKB tokens gives you extra discounts on trading fees, it is a token with many uses in various ways. OKX's trading fees are set at 0.02% for maker orders and 0.05% for taker orders. There is a link in the video comments for a 20% discount on OKX trading fees. By signing up through the link, you can trade at very low fees, 0.016% for maker orders and 0.04% for taker orders. Since these benefits may disappear at any time, make sure to sign up using the link. Click the link at the bottom of the video to proceed with registration. For the country selection, choose your country of residence, then proceed to the next step and enter the email address you want to use for registration. In the middle, click on Referral and make sure the referral discount code is entered, then click Sign Up. A verification code will be sent to the email you registered with. After checking and entering the code, proceed with phone verification. Once you've completed these steps, your registration is finished. After completing registration, proceed with KYC verification. You must complete KYC verification and security settings in order to make deposits and withdrawals, so be sure to set them up. Since it's more convenient to complete KYC verification on mobile, we'll proceed on a mobile device. Download the OKX app from the Google Play Store or Apple App Store and log in. Tap the menu button at the top left of OKX. When you tap it, you'll see the Unverified menu. After tapping, select Identity Verification. You can complete KYC verification using a driver's license, ID card, or passport. Now I'll proceed using my ID card. If you tap Start Verification below, the camera will launch. Use the camera to take photos of the front and back of your ID card and upload them. Next, you need to take a selfie and upload it. It's a simple action like nodding your head. After uploading, the KYC review will take place within 5 to 30 minutes. After completing KYC verification, proceed with the security settings. Hover your mouse over the personal menu on the right and select the security menu. Once inside, you only need to set up mobile verification, email verification, and the anti-phishing code. Next, let's learn about deposits and withdrawals on OKX. The fastest way to deposit and withdraw on OKX is to use peer-to-peer trading to exchange your local currency for Tether. Here, Tether refers to the US dollar. Most crypto leverage trading is done with Tether. Since OKX also uses Tether to buy and sell crypto, you definitely need Tether. Click on P2P at the top of the OKX page. Go in and select P2P. Since you are going to buy Tether, select it and then choose your local currency. Because peer-to-peer trading is between individuals, it's best to trade with someone who has a high trading volume and a high transaction completion rate. You can check all this by clicking on the nickname, so make sure to check this part before proceeding with the trade. You can see the trading methods by looking at the Methods section. This user receives payment in dollars via Skrill and deposits Tether for you. Now, click the Buy button here, enter the amount or quantity of USDT you want to purchase, and then select your payment method. Then, click the Buy USDT button to start the transaction. Send the exact amount to the payment method specified by the seller. Once you've finished the transfer, you must click the I have paid button. After the seller confirms, the USDT will be deposited into your OKX wallet within a few minutes. This way, you can safely purchase it through OKX P2P. Now, let's look at how to withdraw, the opposite process. Click Sell in the P2P tab. The list below shows people who want to buy USDT. Similarly, choose a trader with a high number of transactions and a high completion rate. Once you've selected a buyer, click the Sell button. Enter the amount of USDT you want to sell and select your preferred payment method and you're done. Transfer the cash to the account provided by the buyer. Once you've confirmed the deposit, click the Release Crypto button. When you click it, the USDT will be transferred to the buyer. The cash will be deposited into your payment account. Once you've completed these steps, the withdrawal is finished. Next, let's learn about how to trade. Since futures trading is the most common, the Futures section at the top of the trade menu is for futures trading. When you click and enter, you'll see a screen like this. There are occasionally people who proceed without knowing the functions. Since this involves real funds, you must make sure you understand what each button does before you start investing. If you're trading futures for the first time, there's a demo trading section in the trade menu. When you click and enter, you'll see a screen like this. Click on the Asset section and select the Futures menu. By clicking here, you can participate in futures demo trading. You should familiarize yourself with all the functions of each button through demo trading. When you enter demo trading, you'll see a demo trading watermark at the top left corner. Now, let me explain from here. The first thing you see is the chart section, where you can draw on the chart using various drawing tools. At the top of the chart, there is a time frame. If you click this part on the right, you can select from various time frames. You can click and choose the time frame you want to view. Next to the time frame, you can click on the indicator section to add the market indicators you want. You can add basic indicators commonly used, such as RSI or trading volume. Just add and use the indicators you want. In the center of the screen is the order book. It visualizes and displays the quantities being traded on the exchange. Through the quantity selection section at the top right, you can choose in what unit you want to view the quantities. For Bitcoin, you can select units that show quantities from as little as 0.1 up to 100. At the bottom, through the buy and sell sections, you can easily check which side has more concentrated volume. On the far right is the order window. This is the most important part, so let me explain it step by step from top to bottom. Before I begin, press the settings button at the top right of OKX. When you press it, tap on the account mode section and switch it to futures mode. After changing the mode, press the settings section again. Click on the position mode and switch it to hedge mode. In one-way mode, you can only hold either a long or a short position, but in hedge mode, you can hold both long and short positions at the same time. We select hedge mode, which allows for strategic investing. Next, there are open and close options. Position open is used when you want to enter a position. For example, set it to position open and change the cost section to tether. If the price reaches 66,000, I will enter a long position with 1,000 tether at the limit price. If you click the long open button like this, your limit order will be displayed on the chart. If the price drops and reaches the 66,000 range, your long position will be executed. If you click the X button, the order will be cancelled. You can also modify the order by dragging it with your mouse on the chart. When you start a position like this, you need to set it to the position open tab and place your order for it to go through. On the other hand, the close option is used when you want to end a position you currently hold. Now, for example, let's assume that you currently hold a long position. Since I entered at 68,139, if the price reaches 70,000, I will close the long position and take my profit. So this is how you use it when ending a position. Now, set it to close, and if the price reaches 70,000 as a limit order, you can choose to close either 50% or 100% of your current position. You can also set the quantity like this. After setting the quantity, if you click the close long button below, a long close order will be placed at the 70,000 price level. If the price continues to rise and reaches the 70,000 range, the liquidation order will be executed. Similarly, you can cancel it by clicking the X button. If you want to modify the order, you can grab it with your mouse and drag it to your desired price to make changes. For short positions, just apply the same process in reverse. A short position is a position where you profit when the price falls. Let's assume that you entered a short position at the current price. With the short position open, let's say the market continues to fall and drops to the 65,000 range, and I plan to take profit at 65,000. Now, in this scenario, you would click the close button and set it so that if the price reaches 65,000, you will realize profits on 100% of your position. Close short. In the same way, if the market continues to fall and reaches that level, your short order will be executed, your current position will be closed, and you will realize your profits. That's all you need to know about opening and closing positions. Next, let's click on the section labeled Cross. When you click it, you'll see options for Cross and Isolated. With Isolated, only the margin amount for the open position is restricted. Now, for example, let's assume you enter a long position with $1,000 at the current price. Once you enter, your position will be established like this. If the price continues to fall from your entry point and your loss rate reaches minus $1,000, you will incur a loss of $1,000 and your position will be liquidated. The feature that limits the maximum amount you can lose to the size of your position is called the isolated margin entry method. On the other hand, the cross margin entry method uses your entire wallet balance as collateral. For example, if you enter a long position with 1,000 tether at the current price, the moment your position is forcibly liquidated is when, due to continued losses, the assets in your futures wallet reach zero, at which point the position is forcibly liquidated. Unlike the isolated margin method, which sets the maximum loss to the position size, the cross margin method sets the maximum loss to the total assets in your futures wallet. Since this method carries higher risk, beginners should trade using the isolated margin method. Next to the cross margin option, there is a leverage selection menu. You can select leverage up to 100 times, but the higher the leverage, the greater the risk. Now, for example, let's assume you want to enter a position with 10% of your futures wallet assets using 2 times leverage. Since there is currently about $5,000 in the futures wallet, 10% would be about $500. After setting 2 times leverage, let's enter a long position. As you can see after entering, it's not $500 that is used for the position, but an amount equivalent to twice that is taken as the position size. In other words, you're taking a larger position with a smaller amount of money. The higher the leverage, the larger the position you can take with less money, which increases the risk. It's best to avoid high leverage of 10 times or more. Next, there are the limit, market, and trigger sections. So let me explain each one. First, let's talk about the limit order. A limit order means that you want to place an order at a price you specify. For example, if the current price is 68,470 and you want to place a long order at 67,000 if the price drops to that level. That's how a limit order works. Let me show you how it works. Enter 67,000 in the price field and decide to go long with $1,000 at 67,000. If you do this and press the Open Long button, you can see that a long order has been placed at the 67,000 price you specified. One thing to be careful about is that if you place a long order at a price higher than the current price, it will be executed immediately at the current price. As you can see, the current price is 68,436, but let's say you want to buy long at 70,000. If you place an order like this, a warning alert will pop up and you'll see a message saying it will be executed immediately. It is interpreted as an order to buy at a price higher than the current price, so the price is not specified. In this case, if you look all the way to the right, you'll see an order menu called Trigger. This is called a conditional order. Enter 70,000 in the trigger price and then enter the quantity you want to buy in the amount section below. This way, a long order will be placed at the 70,000 range. Originally, this order method is used to say, if the price reaches the trigger price, execute a stop loss or buy at the order price. However, when the desired price range is higher or lower than the current price, you can use a trigger order to place your order in advance. The same applies to short orders. When placing a short limit order, you can set your short order above the current price. Likewise, you cannot place a short limit order at a price lower than the current price. By using the trigger function, you can place an order at a price lower than the current price. Next is the market order. A market order is an order at the current market price. It is an order that allows you to take a position for the desired quantity at the price currently shown, instantly. This function is used when you need to urgently close a position or quickly enter a position. By setting it to market, adjusting the quantity, and pressing the long or short button, your position is taken for that quantity immediately, making it very useful. Once you enter a position, you can check your position in the position confirmation window like this. On the far left, you'll see the name of the coin you entered and the leverage used. The size shows the amount of tether currently in the position. The entry price is the price at which you entered the position. The liquidation price is the forced liquidation price. If the market continues to fall and reaches this price level, your position will be forcibly liquidated and your loss will be realized. The break-even price is the point at which you neither make a profit nor a loss. You need to surpass this price from your current entry price in order to move into the profit zone. Floating P&L shows the profit and loss of your position. If you're in profit, it will be displayed in green with a plus sign. If you're in loss, it will be shown in red. The maintenance margin ratio indicates the risk level of your position. The lower the number, the higher the risk. When it reaches 100%, your position will be forcibly liquidated. Margin is the pure amount of tether invested, excluding leverage. TP and SL allow you to set your take profit and stop loss levels. For the TP limit section, enter the price range where you want to take profit. Then if you press the confirm button, the take profit area will be displayed on the chart. Similarly, stop loss is for cutting your losses. Enter the price at which you want to stop loss and set the amount to be sold below. Then, if you press the confirm button, the stop loss area will be displayed on the chart. If you look at the menu in the bottom right corner, you'll see this asset menu. Here, you can check the amount of tether available in your trading wallet. So that's how to use the OKX exchange. If there are any parts you find difficult to understand, please leave a comment and I will do my best to answer. Alright, I'll wrap up this video here. Before using the exchange, make sure to sign up through the dedicated link to receive a 20% fee discount and proceed. Thank you.